Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup, market strategies and everything that you need to know about this midweek trade as Nifty heads into this Wednesday after the trading session that was the first ever Tuesday weekly expiry for the Nifty contracts. Remember, the bulls left the day disappointed after having gained in the first initial half of the session as well. There was a 200-point correction from the highs of the day that showed that the confidence at higher levels continues to remain absent for the bulls at around 24,700, 24,800 zones that have continued to remain resilient, resistance zone at this point in time as well. When we talk about the key sectors that dragged the Nifty yesterday, it was the banking stocks that continued to be the pain point, even as the FMCG stocks, the consumption names, they continued to do the heavy lifting for the sectors, along with some support from the IT pack as well. We did see the Nifty Bank fall about 500 points from yesterday's day's high point as well. Now, as we move into today, remember today's day is sandwiched between the Tuesday expiry of the Nifty and the Thursday expiry of the Sensex as well tomorrow. So, and that also will happen for the first time ever after the changes have incurred. We will have to see how the US markets and the cues from overnight as well as this morning Asia are coming in from. So, US markets did see some risk-off action. About 7.7% of a decline on the S&P 500. The Nasdaq also declined by 0.8%. We did see even the Dow Jones down by about 0.5%. This is after the US PMI and the ISM manufacturing data was mixed, but it leaned towards the weaker side. More statements coming in on the tariff front as far as Donald Trump is concerned. He's now said that he's not considering lowering tariffs on India imports. Now, also, Trump did say that he's going to be asking the Supreme Court for expediting the rules on tariffs as well. So that's also something that we'll have to keep in mind. Asia markets this morning, they opened on a mixed note with larger indices declining in trade. GIFT Nifty is also indicating to a mild start towards the weakness side. We can also see that the FII sell-off continues unabated, 1,159 odd crore rupees of a sell-off that we saw in yesterday's trading action. The DIIs, however, net bought 2,549 odd crore rupees worth of stocks. GIFT Nifty, like I pointed out, trading at a discount of about 50 odd points from the Nifty futures as is being indicated. So let's see how this things stand at this point in time. Let's welcome our guest on board. Mr. Gaurang Shah is joining in, Senior Vice President, Geojit Investments, to share with us his views on the markets. Warm welcome to you, Gaurang, and thank you so much for taking the time out for this another discussion on markets. A very, very important day because today marks the beginning of the two-day GST Council meeting back home. So all the cues will be largely driven from the domestic side today. How are you looking at the market setup? Even as we continue to navigate through the changing world order, we have some cues from what has transpired at the SCO meeting. The new relationships that are being formed, those that are prior are being strengthened at large to stand against those are bullying us. Also, back home, we have positive macro data on the back of GDP data, and now all eyes will be on GST. So how are we looking at all of these factors now, Gaurang?
Thank you so much, Sakshi, for having me on the show, and good morning to you and all the viewers of BTTV. So I think a lot has been on the positive side as far as India's international presence is concerned or representation is concerned, especially in the SCO summit. I think key agreements have been put in place. Strategic energy long-term supply agreements have been put in place. Not only the GDP numbers, Sakshi, but also the PMI index was at 18-month high, if I'm not mistaken, and if I read that number right. And the most awaited reforms in GST in form of 2.0, which was announced by the Honorable Prime Minister from the Red Fort on 15th of August. Today and tomorrow, GST Council, along with the Finance Minister and the representatives, will be meeting. Let's hope we have a outcome sooner rather than later in terms of a white paper, and markets will definitely take it with both the hands in case if it is in line or better than what the street has been anticipating, the new structure of GST 2.0. In form of international news flows, Trump and his tantrums, I think slowly, steadily we are discounting large part of whatever he says. And I think we have already factored in a 50% tariff. Remains to be seen what comes next from there. But my sense is that not only this, actually, let me say this, that along with this GST reforms, as and when the need arises or before there is any kind of speculation of economy going through slowdown or sectors going through a pain, I think most appropriate steps will be taken by the government. Policies will be amended, new policies will be put in place. And of course, along with that, whatever needs to be changed in the existing policies, all that will be done to take care of any kind of large negative impact of the tariff on India's economy, sectors, and growth story. So my sense is that as far as market is concerned, I think we are still in a range, but stock specific moves we've been witnessing for quite some time. Broad range for the market on the lower side, 24,400 is the immediate lower level where you will might see some kind of pullback coming in. 24,600 to 34,700 is the immediate resistance where we see overhead supply coming. We've been there very recently and we've seen a down level. Even yesterday, if you actually go to see the move on the markets, both Sensex and Nifty was very choppy. First half was rather rosy. Second half was full of thorns, of course, because of what Trump was going to announce late night, our time, last night, and whatever is announced. So my sense, Sakshi, is that sector-specific moves will be there, and I think if the GST reform 2.0 is in line or better than what the street estimates, then I think markets will take it from both the ends. And consumption sector and auto sector, as we've been seeing, has been the spotlight. They will continue to hog the limelight.
Absolutely. Very important and pertinent points made by you, Gaurang. So I think the all eyes will be to understand whether the steps that are taken today and tomorrow by the GST Council on rate rationalization will ultimately be able to provide that cushion that's needed to, deal with the impact of the external measures that are being taken as well. Just briefly mentioning to all our viewers that the Nifty is indicating a flat with a positive start, at least 2.5% of a start at 25,219. I wish this was true, and we could just go on with this kind of a level. Fantastic 600 point of a jump in the pre-open trade. Let's see whether our wishes can actually come true, but this will settle down. So we'll come back to it at 9:07, and maybe it's all Gaurang's positive views and optimism that's fueling some spirits back into the D Street here. So Gaurang, just mentioning, so help us understand, all the measures that the government is taking by way of GST rationalization. How much of a cushion can that provide from these external shocks?
Well, Sakshi, honestly, I think we are yet to see what kind of impact this tariff is going to have. Okay, we've just been
Yeah.
into this. So it
Yeah.
will take some time for us to analyze. We need numbers, and numbers will only come through as we go into the future. Yes, fisheries, that is shrimps and fisheries related companies, gems and jewelry and textiles are the three sectors which will take it on the chin. Uh, then remaining upon what announcements are made in terms of tariff by US on India, I think we'll have to take those measures accordingly as and when we go over there. But broadly speaking, my sense is that to answer your question, whether GST reforms will take care of, I don't think it will take care of it completely, Sakshi. There will be, as I mentioned, Sakshi, that government will rise to the occasion as and when the time comes to do something to support the economic growth, corporate growth, sectorial negative impact, if any, etc., etc., etc. So there will be decent amount of push coming in, and as I think if we have to respect what the Honorable Prime Minister said on 15th of August from the Red Fort, that it's going to be a big surprise or a huge gift to the Indian consumers. If we have to take that on the face value, then I think there's going to be a lot that's going to happen in GST reforms and post GST reforms.
Okay, got that. Let's talk sectors. Gaurang, I think that is what is going to be keeping all the retail investors really hooked onto the screens today. We are going to be seeing how an auto sector will perform today. We are going to be seeing how FMCG consumer durables are going to be performing. Maybe to some extent even textiles, fertilizer space, footwear stocks as well will also be in focus. There's an expectation that some rationalization on taxes can actually come in to see the end consumer benefiting from some lower prices. So if I have to ask you to mention top 2 or 3 sectors that you are betting big on because of the GST rationalization and with the hopes that that could lead to higher volumes and sales, what would those be?
So I'll be jumping the gun, which I normally don't like to do, Sakshi. But yeah, I mean, two sectors that have been in the spotlight, FMCG and autos. And let me say this, what my understanding is. Of course, my understanding is very limited. But as far as autos is concerned, it is not going to be across the board. It is going to be dependent on the engine capacity. That is, how much power does that engine has. That is, I'm talking about two-wheeler, maybe to a certain extent three-wheelers and entry-level cars. When it comes to four-wheelers, I think two more things will be kept in mind. One is, of course, the capacity of the engine, and the second would be the length of the vehicle. These are the two. Then, of course, FMCG, as we all know, daily consumables, which we need to consume. Along with that, certain rationalization in services industry. So you have energy, power, you have insurance sector, which is actually arguing that there should be no reduction in GST. That's a pleasant surprise to me, in fact, but not so very pleasant for the insurance companies. And of course, to a certain extent, maybe if I have to take a little bit of more aggressive call, where the sin tax category is there, Sakshi. Likes of tobacco products, cigarettes, um, alcohol beverages, kind of companies where the impact would be there in the initial part. But the fact of the matter is that these products or these sectors which come under sin, 40% new slab, consumption is going to happen, right? So maybe it might come down in the immediate effect, but long term, I don't think there's going to be a huge negativity for these sectors. So I would take contra call on syntax related sectors and a decisive long term call on autos, power, utilities, that is power, and of course insurance companies and autos and FMCG. So that's going to be the broad universe.
Point noted. I also just wanted to highlight for the 40% GST proposal that's come into the GST Council for sin goods and for even the gambling casinos as well. Delta Corp Chairman Jaidev Modi has actually come out on the media to speak against such high taxes on the industry. He has actually said, and I would just wanted to quote from his statements. He has said that the 40% GST contemplated will make the entire sector unviable. It will affect thousands of jobs, affect visitation to the states of Goa, Sikkim, for instance, and will also negatively affect the revenue collection, make redundant all the capex that has been incurred by the industry. Those are the statements that are coming in. So one has to keep an eye out on Delta Corp today. And of course, we'll look at some tobacco names and extreme luxury goods that could be falling under that 40% taxes front as well. Apart from this, let me also ask you on the textiles bit. We do know that textiles were reacting negatively to the high tariffs imposed by the US. For many whose core ground is US in terms of exports, 50-60% of their revenues actually come from the US there, and therefore they have been consistently asking for some sort of a financial assistance from the government to maybe look at the interim relief from such tariffs at this point in time. GST, on the other hand, could actually cushion that at least, because there's again hope that most of those textile could fall under 5%. How would you look at textiles particularly?
So actually, that was unfortunate. This textile sector was a booming sector in India many years back. We had large mills across states, whether it is Maharashtra, Gujarat, UP. There was huge manufacturing of textiles that was happening. But then this sector was let down by the government policies and, of course, policy changes with respect to markup with the competition at the international level, especially the likes of Vietnam and Bangladesh, and to a certain extent, even China. So we did suffer and we are suffering, but very recently, I think the government has taken some steps. This tariff will make us unviable to a great extent unless and until some serious changes are done internally at different levels, direct, indirect taxes. Uh, we are positive on one company. Okay, let me give you a disclosure, Sakshi. Before I do that, I had slipped my mind to give that disclosure. That recommendations on your show this morning, Sakshi, is part of our research team recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest either. But we give recommendations to our clients on similar lines. They might hold their investment position, if any. So Raymond's Limited is one textile company that we've been positive on. Other than that, we were positive earlier on Vardhaman Textiles, but since our targets were in place, we have not continued with that coverage. So Raymond's is the only one that we continue to have a positive coverage.
Fantastic. Markets settled in the pre-open. Let me just briefly mention that to our viewers again. 24,616, a 36 point of an uptick is what you see. So we are hoping for a positive opening today, mild one at that, 1/10% higher as the implied open is suggesting right now. Autos could be driving in a fast lane. About 0.5% higher is what the indication is, at least for now. Real estate, FMCG, metals could also be opening higher. Even the IT pack and the broader markets could be opening up. But it could be the banks again that were the weak link even yesterday that could continue to face some pressure, as is being indicated in the pre-open. Stocks like M&M, even power space that even was mentioned by Gaurang. Some names like Power Grid, NTPC, they're again in focus today. They were also up yesterday. IT names like TCS are in focus. TCS, there's also news flow that it has expanded its long-standing partnership with Trig, a leading Scandinavian non-life insurance company, through a 550 million euros agreement spread over 7 years. So that's something that one could continue to look at. The collaboration builds on a 15-year-old relationship between the two companies. And under the new arrangement, TCS will partner with Trig to simplify and standardize operations across the core markets in Denmark, in Sweden and in Norway. So that's going to be in focus as a specific stock. Within the IT pack, Gaurang, do you have any preference as of now? This space has been long in a consolidative to a negative zone now. Do you think time is ripe to relook at the IT space on a positive note?
Well, long term, yes. And this deal that TCS has signed, I believe it's a 7-year contract. It's a long term contract. So it's a positive. And on the IT sector, well, we have been positive even when the tariffs were announced. We discussed it earlier also, Sakshi, in April and April onwards, when a lot of people started writing down an obituary for IT sector. We remained positive in that point of time. So TCS, Infosys, HCL Tech Mahindra among the large cap, Coforge, LTI Mindtree, L&T Technologies amongst the mid cap names, if you will. In the small cap universe, KPIT Tech, Science Limited. But let me say this for the benefit of your viewers, that please have 1.5 year plus kind of time horizon. This primarily because the dependency is there to a large extent on the top line and bottom line as far as the product, services and platforms that Indian IT companies provide to the US companies. Now, whatever this intelligent person in America sitting as a president, whatever he's doing, whether there's going to be a slowdown, whether there is going to be budgetary cuts, discretionary cuts, poor Mr. Powell is forced in a corner to give a rate cut, possibly in September. The street talk is that by 15th of September, Sakshi, you might have a rate cut coming in from the Fed, which is one of the reasons why on Monday we saw the IT pack rally. So we remain positive, but please have 1.5 year plus kind of time horizon.
Fantastic. So long-term horizon is what you need to have. Some more stocks are in focus, and I'm just going to be bringing up those stocks because they have a lot of retail interest as well. From the food delivery space, Eternal, the parent company of Zomato, could be in focus today because Eternal has decided to increase the platform fee for food delivery orders by 20% starting September 2nd. From 10 rupees to 12 rupees now. Remember, less than a year has passed since the business last updated the fee to 10 rupees from about 6 rupees odd. That was a substantial hike, and now there is another 20% hike that's actually coming in by way of Eternal. Let me understand from you, Gaurang, how are you looking at this consistent dependence that Eternal is having on the raising of the platform fee? They started off with zero, and just as they understood that people are getting used to of using their platforms, this turned out to be one of the aspects that they continued to build on. From as low as 3 rupees to now 12 rupees, it's gone up substantially just within a matter of 1 or 2 years. How would you look at this aspect? What is the kind of translation that you see for the business because of this fee hike? Because people are used to it. Nobody's going to leave Zomato or a Blinkit immediately if they are used to of ordering on an everyday basis.
So you can't blame Swiggy or Zomato or maybe any other company. You have to blame yourself, right? Yeah, the companies will offer you freebie when they start a particular, venture to attract. Once the attraction is placed, once the client base is made or, customer base is made, once they see that people are now getting hooked onto it or they are compulsive users of their platform, they are going to come in with these kind of, you remember, telecom sector.
Yes.
Uh, I mean, a similar kind of thing, the kind of freebies. Even now, Sakshi, the Geo Fiber, if you actually go, I don't know if you read it or not, but I've used it. A 50-day free trial with unlimited GB, 800 plus HD definition channels, and access to OTT platforms like Sony Live, etc., Geo TV, etc. They give you freebies. They make you hooked onto it, and then they charge you for it. So it's a very simple game. There is absolutely nothing to complain. I think you have to pay a price. There is nothing called free lunch in this life, right? So this increase, in fact, Sakshi, Swiggy is at 14 rupees delivery fees, if I'm not mistaken. Swiggy is still 2 rupees lower after this 2 rupees hike. That is 20% hike compared to 10 to 12. So again, our disclosure, we have been positive. We've discussed this particular stock when it was earlier known as Zomato. IPO price was at 76, made a stellar listing, ran up to 150, then came down below the IPO price of 76. I think the low was 40 or 50 rupees. And from there on the upward journey, 2000 plus dark stores that they plan to open by December 26 next year. They are going on track to get it finished off by December 25, that is this year. Venturing into new geographies, tier 2, tier 3 cities will get a larger market share, will get a larger subscriber base. Blinkit, which has been actually the greatest contributor, and this Blinkit, Sakshi, when the company took over this Blinkit business, that is groceries business, was actually seen as a black swan because of the price that they paid. And fast forward to the current situation, Blinkit is delivering much better than what food delivery platform is doing. So we remain positive on Zomato. That is eternal from a long-term point.
Okay, positive on Zomato, and Eternal is the top mover on the Nifty right at the open, 1.5% higher on the Nifty, even as the Nifty is opened above 24,600 and is hovering around that level right now. 22 points of an uptick is what you see on the Nifty. Sectorally, all the sectors are higher, barring just slight weakness on the financial services sector, but rest of them are all up, despite the fact that India VIX is again climbing about 0.7% in trade at 11.5 odd level. So keep an eye out on that as well. But on the stocks on the Nifty, you have Eternal, M&M, TCS, ONGC and Hindalco as among the top movers. On the top drags, you have Infosys. On the flip side, Titan, Asian Paints, Bajaj Finance and ICICI Bank as the top drags as well. Let me look at the sectors. PSU banks have climbed up. You have a 0.5% of an uptick on the PSU banking front. Let's look at even oil and gas, that's ticking higher by 0.5% again. Autos are also driving about 0.5% up. Pharma is also higher in trade as well. Just about financial services, that's declining. Any top movers in the Nifty 500 that we should mark? I think the sugar space continues for the second day in a row. Many of the sugar stocks are higher. Rajshri Sugars is up by 8%, Simbhavli Sugars up by 5%, and many others are now joining in. With the smart move that we had seen yesterday, many of them had also hit a 20% circuit. So all of that space is coming back into action. You have some names like TBO Tech that's higher, some paper stocks like Astron Paper that's up in trade. What else is higher? Vimta Labs is also up and about in trade. Andhra Cements is higher. Among the top movers, Godavari Biorefiners is up in trade. So those are some of the stocks within the Nifty 500 basket that has opened higher in trade. We also have now with us Mr. Kiran Jani to share with us the technical view on the market. So let's quickly welcome him. He's the head of technical research at Jenham Broking. Kiran, warm welcome. Good morning to you. How are you looking at the market open?
Very good morning, everyone. So overall, if you look at the market, definitely it has given a reversal pattern from the lower time frame. But yesterday corrections or yesterday falling from the higher levels, it's creating a cautious for sure. Nifty is placed very well, but if you look at the Bank Nifty is it at very important level. If you look at since last 3 days, Bank Nifty is holding 53,600 and now it is trading at that level only. If it is breaking that level, then we are little bit cautious or little bit worried that Bank Nifty can go further down somewhere around where this 200 days moving average, which is 52,900. So anyone is long on Bank Nifty, keep a very strict stop loss below 53,600. If markets keep sustaining above below 53,600, then we can see some price corrections towards 53,000 for sure. Coming to the Nifty, now you can see metals are doing very good. You can also see IT, selective IT and FMCG are doing good. And lastly, auto is doing good. So that's why we are not seeing a much worried as Nifty because there is a combination of all these stocks. But if you look at the Bank Nifty, private banks are a little bit into the downtrend. PSU Bank is trying to give support to the Bank Nifty, but as of now, Bank Nifty is already broken 53,600, so we are a little bit cautious. Otherwise, on Nifty, buy on dips would be the strategy with the strict stop loss of 24,300. So on Nifty, we are recommending buy at current market price or any dips toward 24,500 to 24,400. Positional stop loss is 24,300. And by this month end, I mean September month, we can again see the price level of 25,000, 25,200 for sure. For Bank Nifty, we are just in mode of wait and watch. Unless Bank Nifty is not crossing above 54,500, we are holding our view as a waiting watch.
Okay, fair point. Let me just look at some of the other movers in the markets as well at this point in time. The first trade that's taking place. TBO Tech is 11% higher. There's this classic vacations acquisition that's really fueling some move. UPL is up by 2%. There is some internal restructuring that's taking place. Vimta Labs is up by about 6 odd percent. Indus Towers, remember the Africa foray. There is some weakness here, 3.8% of a decline that's coming in. So those stocks are also in focus, at least for now. And the platform fee hike for Eternal, which we've already marked out for you. Those are the stocks that are buzzing in trade. But metals, I think, are shining bright, over a percent gain, even though large part of the sectors have now drifted lower. IT is down by half odd percent, consumer durables, realty, financial services, Nifty, bank overall, even the broader markets have slipped. Only metals, oil and gas with PSU banks. Three sectors that are actually hovering higher, rest of them have all slipped, with the Nifty also declining by 1/10% at 24,545 at this point in time. But metals clearly shining bright at this point. Tata Steel, Hindalco, the top movers on the Nifty. Gaurang, how are you looking at the metal names at this point in time? What's the overall view here? Seen as a very cyclical space. How should one approach it?
So, again, actually, it's a longish kind of a view on metal space because of the tariff-related and China-related news flows. Like undoubtedly, domestic market, there has been a decent increase in terms of consumption, and this consumption is likely to go up with focus on infrastructure creation by the government at the center and government at various state levels. Real estate market is doing well. Corporate capex is going to come up, etc., etc. So remain positive on Tata Steel, JSW Steel, NMDC, Hindustan Zinc, Hindalco, Vedanta. These are some of the names that our research team is positive on. But purely from a long-term point of view, not in long-term for metal sector would at least be 2.5 years plus, Sakshi, given the headwinds and the international dependency. So we are positive, but only thing have at least 2.5 year plus kind of time horizon.
Okay, got that. Kiran, to you, top stock ideas for the day. What is on top of your radar?
So definitely metals are on our radar. If you look at the TISCO, I mean Tata Steel, it is trading since last 3 days height of high bottom pattern and JSW Steel. These both stocks are looking very good from the metal. So if you consider Tata Steel to go long at current market price, keep a very strict stop loss below 158 or as a positional stop loss 155. Overall chart pattern looks very much promising. We can definitely heading towards 170 on Tata Steel. So Tata Steel looks promising at current market price. Coming to the JSW Steel, this is the fourth time JSW Steel is testing 1050 level. If prices keep sustaining about 1050 level, then it is again going to consider as a ascending triangle pattern breakout, and we can expect price target of 1100, 1200 kind of a target in upcoming time. So definitely JSW Steel and Tata Steel looks very much promising. Now coming to the auto, there is a one more sector which we are liking. So in auto, Tata Motor is on our radar now. If you look at the overall chart pattern, after making multiple lows towards 650, 640, now Tata Motor back into the upward trend. On daily price chart, no doubt it is trading below its 200 days moving average, but it is also trading above its 50 and 100 days moving average and developing or in process to give a breakout from the inverted head and shoulder pattern. So once Tata Motor crossing 700, then definitely there are a big upside is waiting. But as of now, also at current market price, you can go long, keep a strict stop loss below 660. Once Tata Motor crosses 700, you can add more position for the target above 750, 780. So Tata Motor, Tata Steel and JSW Steel, three are the stocks which are liking for this month.
Okay, two metals and one auto stock on your radar. Gaurang, coming to you, another very important, update that took place yesterday is at Semicon 2025, when India is scaling up their own capabilities when it comes to semiconductors. Prime Minister Narendra Modi also highlighted the mission for both semiconductors as well as critical minerals mission at the event as well. How are you looking at what is in the offing, since the government is focused clearly on bringing back all the manufacturing capabilities of such important critical chips as well as rare earth minerals back to India? How are you looking at the opportunities for retail investors there?
The Made in India chip yesterday by the Honorable Prime Minister. A large scale production likely to kick off by December 2025. Dependency is going to come down, cost effective is going to come in, opportunity is going to open up in terms of our capability and capacity of exports. And of course, new chapter in is to be written as far as that entire uh, uh, make in India, made in India that was mentioned by the Honorable Prime Minister, and look at what we have achieved. I think it's extremely remarkable, and this is what will make us survive the external shocks and reduce our dependency. So remain extremely positive, Sakshi, on the EMS sector. Two companies that I can name, of course, I've named one earlier and it's been doing quite well after a slight bit of correction, that is PG Electroplast. But CG Power is also the second one, which opened up its new facility in Gujarat, Sanand, if I'm not mistaken.
Yes.
A positive on these two stocks.
Okay, PG Electroplast and CG Power both on top of the radar as far as the new age sectors that are being seen as core themes for the next few years that one could definitely look at least for now. Also, we are looking at a lot of other spaces now, Buzz. Since Gaurang is here, there cannot be a day when we cannot discuss about defense. BEL is climbing up over 1% higher. It's among the top movers now on the Nifty yet again. We did see some move on Cochin also last couple of days yet again. How are you looking at the defense names at this point also? Are you advising continuation of accumulation for those that have a long-term vision, since you bet big on this space all across last 2 years, all through the volatile moves, you made consistent bets on this one?
Well, I don't think I'm going to be ever negative on the defense back, at least for some time. And that sometime is going to be a pretty long time, Sakshi. And that's purely because of the kind of orders that these companies, BL you mentioned, I think they got 650 crores orders on Monday, if I'm not mistaken. So, I mean, this is the reality, let's face it. BEL, Cochin Shipyard, these are the two names under coverage. Other than these, there are companies which are very, very strong. These are no recommendations, but just a reference to companies which look extremely promising in terms of future orders coming in and capability in terms of top line, bottom line. So you have Garden Reach, Hindustan Aeronautics, Bharat Dynamics, BEML, Mazgaon Docks, all these. And some of the private players also, Sakshi, are gaining huge spotlight with orders coming in from the Defense Ministry of Defense. So this sector is good for 3, 4, 5 years. If you don't need the money, don't sell. If you want to invest, have a clear cut 3 to 5 year plus kind of time horizon.
Absolutely. Just before we let you go, Gaurang, another space that we did not discuss with you, Friday is when we got some insights from Reliance Industries AGM, and the Jio IPO has finally been announced. It will take place in the first half of 2026. Just wanted to get your views on the largest listed market cap company on Indian markets. What after the AGM announcements are you doing here? How are you advising clients? A lot of our viewers are asking us, should they now invest in Reliance Industries at this point, or should they keep the money away for the largest ever anticipated IPO that could be coming in next year? So how should one really look at it?
So if you buy it now, as and when the company gets hived off and gets listed as a separate entity, Sakshi, I believe you will get, because currently Geo Mobility is a business under Reliance Industries balance sheet, right?
Yeah.
So my sense is that, and look, I mean, my humble request to those participants who are eagerly, or rather more eager to get the business hived off in compared to what the management wisdom is. Hold your horses, bro. I mean, what is the hurry? Give time to the management, give it to their wisdom, give it to their understanding of the business, and as and when the appropriate time comes, they will do that at an appropriate time and valuation. So why rush into it here? So this reaction on Reliance Industries post that AGM on Friday was because of things not working out the way market participant wanted to, but we remain positive on Reliance Industries. Now or later, it's your call. But don't waste your time trying to find the right time and the right price. You might miss the bus.
Okay, until the time the Jio IPO really comes in, which will now be closely tracked along with Bharti Airtel, should one continue to even bet big on Bharti? You've been positive on it for a long time.
Well, absolutely. The sector looks very promising. And my sense is that we are going towards 300 rupees ARPU, Sakshi. It will not be immediately. And what I have got to know from my market networking is that by December 2025, you are going to see another hike in tariff. I'm talking about telecom tariffs.
Yes,
So,
yes.
tariff is a
True.
word we need to be very careful talking about. So, telecom tariffs are going to go up at least by December 2025. And my sense is that we are going towards 300 rupees ARPU over the next couple of quarters.
Fantastic. Okay, Gaurang, 9:30, we have to thank you for being with us, and it's always a pleasure to seek all your wonderful insights with us. Thank you so much.
Always a pleasure and always an honor, sir. Thanks so much.
Thank you so much. Hope you have a great day. All right, viewers, we'll continue our discussion with Kiran. Now, Kiran, first 15 minutes done. We are flat with the positive bias, but we've slipped below 24,600 at least for now. What's your sense? Do you think the markets are going to be on the edge till the time we finally get GST news come out and help us understand what exactly is taking place? How are you looking at the markets then?
See, overall, if you look at the market structure with the global headwinds, so definitely on domestic side, we are not facing any such kind of a bad news or on economy level. So definitely, we are very much bullish on the market, but this volatility will keep running in our mind or in our market. So if you can buy a right stock and you can sit for some long-term time, definitely you can make some good money. Don't try to chase this volatility and don't try to time the market, definitely. Now, looking at current setup for longer term time period, definitely 24,500 to 24,000 is the accumulation zone. Recently, whatever the bottom has been formed from 21,750 to 22,000, there is a massive bottom and we are not looking market to breach below that level. No doubt that is again from here, it is a 10% downside. So within this 10%, any dip, it's a very good opportunity. You can go long on the market waiting. We are looking for target for next at least 1 year or 2 year down the line. We can see Nifty to climb at 28,000. This is a very optimistic and very bullish target we are looking. Now coming to the very short term, like say for example September or maybe till the December, you can go long. for definitely you can stay long. The selection of sector would be the importance. So FMCG is the counter which we are liking, IT which we are liking, auto already performing, but still you can go on auto long. And lastly, the metals, because you look at the way copper, zinc, all these essential commodities are giving breakout. Definitely, this metal stocks will going to shine for sure. Now let's come down to the intraday. So I shared a larger term, then mid term, and now coming to the intraday point of view. As we were discussing in the morning, 53,600 is the major support. You can see market made a bottom of 53,560, and now it is climbing above 53,700 level. Looking at the intraday point chart, market, I mean, Bank Nifty has created a 3 bar positive divergence. So it is a contra call, risky call, but one can go long at current market price 53,650 on Bank Nifty. Keep a strict stop loss below 53,400 for the intraday purpose, and you can expect market to touch somewhere around 53,800 to 54,000 for sure. And if market keep holding this particular low, then definitely by weekend you can see 54,500 kind of a target on Bank Nifty for sure. So it is a very good time to enter into the Bank Nifty for sure.
Okay, fair point. We were discussing about the telecom space also. So, Kiran, I have to just highlight brokerage houses updates here, and I'll take your view too. CLSA has come out with a report on telecom space. CLSA says they expect Jio's rising ARPU will drive 50 to 60% growth in revenue and EBITDA by FY28. Jio remains relentless in investments, and therefore its much awaited IPO is set for first half of 2026. Jio's valued in Reliance Industries SOTP at US dollars 128 billion EV on 13 times EV to EBITDA, and they also believe Jio IPO will be a mega event and a re-rating trigger for even Bharti Airtel, and they believe Jio and Bharti are two of the most direct ways to invest in India's digitalization, and they also offer a highly favorable risk reward as well. So that's what is coming in from CLSA. There's also another aspect to telecom, and that is by way of towers. CLSA has also come out with a report on Indus Tower today with a high conviction outperform rating, but they have slashed the target here from 595 to 520. They believe the board has approved the foray into African beginning with Nigeria, Uganda and Zambia. Airtel Africa has 37,579 towers, and out of which 2,157 are owned, and these countries account for about 500 towers, and hence Indus planned revenue diversification is unlikely to be as significant despite the anchor customer relationship with Airtel Africa. So those are the statements that are coming in from there. Although they believe Indus's board is committed to reinstatement of distributions, but with an unjustified delay in dividends. So some of the statements coming in from the reports there. Let's try and understand this entire space. On the one hand, you have Reliance Industries, you have Bharti Airtel on the other side, which is a pure play telecom player. You have a lot of these ancillary names, Indus Towers, HFCL and the likes, which Tejas Networks, for instance. These were all in focus when the entire telecom theme was running. And now you have the Jio IPO that's coming in. How are you navigating and how are you looking at these new found aspects or themes?
Basically, if in India, if we discuss about the telecom, we as a brokerage houses or as a company, we don't like to play for the telecom ancillaries. We would like to directly play with the telecom sector only, because there is something like a monopoly only, because you'll see only three companies are available in India for the telecom services like Bharti Airtel, Jio and the Vodafone. Vodafone is no more in the game because the prices is also showing same day. There is no technical structure which can motivate us to discuss about the Vodafone. Now coming to the Reliance, now until and unless Reliance Jio is not getting demerged or delisting again, there is no point of discussion, because Reliance is a conglomerate and there are so many things comes under Reliance. So if, even though we are bullish on Reliance, even though we were bullish on telecom sector, it is with what logic we can go long on Reliance, that is very difficult. So now only one stock is remained, that is Bharti Airtel to discuss. Now overall Bharti Airtel chart patterns look very much promising. It has given a breakout and given a fantastic return. You can see from 2023 stock price was at 700, and then in 2025 it made a high of 2100. So almost 3x return in last 2 years. So now there are a time prices will go in time correction. Already we have seen from 1700 to 14 or 1500 kind of a range from 2024 to 2025 April. From 2025 April, it has given a breakout, made a new high. Now again into the that range only. So Bharti Airtel looks promising. Any dips towards 1800, 1700 is a very good buy. You can go long, keep a strict stop loss below 1700. There are very less chances Bharti Airtel can break below 1700. And you keep going long and accumulate this particular stock, definitely you can see some 21, 22 kind of 2200 kind of a target by at least March 2026. So Bharti Airtel is very good play, and we believe one should hold Bharti Airtel only.
Okay, got that. I hope this has also given you some sense. Let's come back to the market to see what's happening. Metals have climbed even higher, 1.7% move coming in. Tata Steel, remember, has been the top pick that Kiran has marked out. It's the top mover right now, 2% higher. We also have now JSW Steel that's moving up in tandem, 1.5% up. Jindal Steel and Power is also up by 3% in the F&O space as well. So the entire metal space is higher. Oil and gas is also taking up in trade. PSU banks, and now some gains coming in on the broader markets. The small caps, for instance, 0.5% higher in trade for the small cap stocks. Let me just highlight some stocks here. So again, we were marking out telecom names. So Tejas is again up by 4%. ITI is up by 5%. You also have some other names like Mahanagar Gas, Reliance Power that's up in trade. You have names like Gujarat State Petro that's up. You have Welspun Group stocks that are moving, both corp and living. Kalpatru Power Projects is also higher in trade. Godfrey Phillips. These are all the names from diversified sectors that are all up and about in trade within the small cap names. PSU names, HPCL, Oil India, Indian Oil, you have ONGC, all of them in the buzz. Let's discuss oil and gas with you, Kiran. Any new, fresh, probably positions that you may be taking in the oil and gas space as of now?
So in oil and gas, BPCL and HPCL are on our radar, because if you look at the overall chart pattern, there is a inverted head and shoulder pattern breakout is there on BPCL. After that, BPCL made a high of 330, 355, and from that level, again it is hovering somewhere around the previous breakout level, and it is also have a very good support of 100 days and 50 days moving average. So at current market price, you can go long on BPCL, keep a strict stop loss below 300. If prices is not breaking below 300, then definitely you can expect price target of 360, 370 for sure. So BPCL. Now coming to the HPCL, again a same chart pattern. There is a cup and handle pattern breakout. Stock price is continually into the falling channel. But now on intraday point of view, you can see there is a breakout from that falling channel, number one. On daily price chart, stock price is taking support at 200 days moving average with positive divergence. So one can go long. Very low risk trade is available on HPCL at current market price. Keep a strict stop loss below 370, and you can expect HPCL to climb somewhere around 420, 430 for sure.
Okay, got that. I hope this has also helped you out in understanding how to approach this another space as well. Okay, I think some pharma names are ticking higher. You can see Cipla now moving up in trade. Pharma names are pulling up in trade too. PSU banks is another space that we should definitely discuss with Kiran because PSUs have climbed. Remember, from the word go, they've been hovering higher, about 0.5% of gains can be coming in. So it's actually defying the overall trend in the bank Nifty and the financial service private banks. PSU banks is taking higher. How are you looking at this contrast? Is it the space that will now start to outperform?
So here I just wanted to take a time and answer on the pharma first. So if you look at the pharma, in subsector in pharma, laboratory doing very well, where the overall pharma is not doing good. Or I can say within the pharma, there are very selective stocks are doing good. So like say for example, first discuss Cipla. Cipla has given a breakout from the rectangle pattern, which took almost 1.5 years to develop. And after that 1.5 years of consolidation, now Cipla is giving breakout. So Cipla is very good candidate. Keep a strict stop loss below 1550, and you can go long, keep hold for at least 2 to 3 months. You will definitely see 1700 plus kind of a target on Cipla. So risk reward is fantastic. Definitely everyone should go long on Cipla, number one. Now coming to the within the pharma, laboratory stocks are doing good. You look at the Metropolis, you can see Lalpath Lab, both are looking very good. Anyone Alchem Laboratory. So we already suggested our client Alchem Laboratory and Dr. Lalpath Laboratory. Coming to the Dr. Lalpath, it has given a uptrend from 2400 to 3500. Now after 3500 high, it is falling down, and now today it is assuming an on a high top high bottom pattern. And also price is trading above the 20 days moving average. Overall chart patterns looks very much promising. You can go long at current market price, keep a strict stop loss below 3200 and go long on Lalpath Laboratory. Coming to the Alchem Laboratory, again same double bottom pattern breakout is there. Stock price is trading above its 200 days moving average also. A big breakout is awaiting. So you can go long on Lalpath Laboratory, Alchem Laboratory at current market price. Keep a strict stop loss below 5000 and you can expect price target of 58, 5700 in upcoming time. So within pharma, laboratory stocks are doing very good. Dr. Alpert Lab and Elchem is our best pick, and Cipla overall pharma per se you can go long. Coming back to the bank nifty, it is already started trading into the heart of high water pattern. And for the bank nifty, definitely PSU can be the savior from this downfall. If you look at the overall PSU chart pattern, looks very much promising. And within the PSU, SBI, Bank of and Indian Bank are our preferred pick. So SBI level wise, you can go long at current market price. Keep a strict stop loss below 790. If 790 is not broken down, then we can expect price target of 850, 840 in upcoming time. And another stock is Indian Bank. If you look at the Indian Bank chart pattern, it is again a very good pattern to trade at current market price. Previously also we discussed Indian Bank somewhere around 640, and from that after that stock price made a high of 680. Now again it is consolidated, retested its previous support and trading at 667. You can go long at current market price, keep a strict stop loss below 650, and you can expect price target somewhere around 700 in very short time. So Indian Bank and SBI both are looks very much promising at current market price.
Okay, got that. Another space that we should definitely address with you, Kiran, is how the bullion prices, gold and silver, have been continuing to climb at record high levels right at the start of the festive season, and we are yet to see the Navratri, we are yet to see Dhanteras, Diwali, and the prices have already skyrocketed both on gold and silver. So, help me understand, how are you advising clients? Are you seeing any reflection on the gems and jewelry stocks? Are you looking at enhanced buying maybe at the gold financiers? Should one look at the equity way of investing in gold and silver, or just trust gold and silver ETFs for now?
See, the both answer would be different. The reason being,
Sure.
gold is a natural hedge against the inflation. So, as an investor or as an invested advisor, we always prefer that one should have a 10-20% kind of a portion in your portfolio, a direct gold exposure. Like now, the direct exposure you can be taken as a physical gold, or we likely to advise people rather than going for the physical gold, you can use SGB, you can use MF, I mean gold ETF, or you can use gold mutual funds. Because if you buy a physical gold, it is a non-productive cash for you. Because in India, I don't think so anyone is selling gold. Like say for example, everyone is holding gold, tons of gold in India household, but it will never come into the market. So it's a non-productive cash. And as a finance guy, we always believe whatever investment you do, it should be a productive investment. It should create a risk-free return, or it should create some dividend out of that return. So it is always better for the gold. You can go for the mutual fund, you can go for the SGB, you can go for the gold ETF, because it's a natural hedge. Number one, you can pledge that and you can again utilize in trading perspective. So that is a added advantage. Now coming to the as a equity investor, if gold prices is rising, that is actually a very contra for the equity investment. But there are some gold related stocks, like you can say Titan, jewelry stocks like Titan, Kalyan Jewelers or something. You can go long position. But again here, if keep gold pricing is keep going on, definitely this there will be the low of demand, and that particular stocks are may not do very good. So there is a two types of investment. Gold as a equity market is keep going up, definitely gold will not perform, but gold again is a natural hedge. So it is better you have a investment in gold also, and gold financing company and gold related company. So our preferred pick in overall sector is like Titan and Kalyan Jewelers, and for the financing Muthoot Finance. But you look at Muthoot Finance, Manappuram Finance, both stock has run away. So not at current market price, but any dip you can go long. And for the Titan at current market price look promising. So Titan you can definitely go long. Keep a strict stop loss below 3500, and you can go long on Titan for sure. And as silver price is rising, we would like to highlight Hindustan Zinc at current market price. Hindustan Zinc is the seventh largest company in the world who is producing silver. So at current market price, you can go long on Hindustan Zinc. The way silver price is rising, definitely Hindustan Zinc will replicate that, and we can expect price target of 700-800 for short term. So Hindustan Zinc look very much promising behind the silver pricing.
Okay, fantastic. So that's the view that we have on the entire space as well. Meanwhile, viewers, let's also keep an eye out on capital market stocks, especially NSDL, the recently listed stock. It's in focus as 8 million shares are up for trade after the 1 month lock-in expiry takes place today as well. Remember, 4% of the equity of NSDL, that's valued at approximately 107 million US dollars, will exit the 1 month lock-in period. The event, along with similar lock-in expirations also being seen for Sri Lotus Developers and MNB Engineering that also got listed at the same time, could also see increased market volatility as well. NSDL has actually shown a strong post-listing performance, potentially prompting some profit booking that could come in by the early investors. So keep an eye out on NSDL, keep an eye out on Sri Lotus Developers and MNB Engineering as well. Kiran, we do know it's a very small trading data for you in all these newly listed stocks, but any of those that have come onto your radar at all?
NSDL is on our radar. Reason being, we generally follow one strategy, that is we call IPO strategy. Whenever the price is crossing the listing week high, then we are expecting that particular stock can do very good. So NSDL has already broken down its IPO week high, so definitely one can go long on NSDL at current market price. Keep a strict stop loss below somewhere around 1100. If prices is not breaking down the 1100, you can definitely expect some good amount of rally on NSDL, because see, now the 1 month is completing, soon 1 month will completing. So generally, majorly, all kind of a sell-off has been overcome. Now you look at only two player, NSDL and CDSL. It is something like a monopoly kind of a business only. And the way the demat accounts are started opening after the COVID, the flow is very good. No matter whether there is a derivative expiries staying or not staying, demat account is something which is very compulsion. And we just discuss about the paper gold, ETF gold, or maybe mutual fund. Everything required demat account. Now people have a very much optimism about the insurance company also, that insurance company also dematerialize and it has to be in your demat form only. So in developing country, definitely this only two companies providing this service. So future is very fantastic. So very very long term time, if you are hold, you can hold NSDL at current market price, definitely can hold.
Fantastic. Okay then, Kiran, thank you so much for being with us then this morning and helping us out to navigate this entire move on the markets. We have slept again into the negative zone, so let's see how this really carries on in trade today, viewers. Let's wrap up the markets for the morning edition. 24,569 on the Nifty, 12 points gone there, but metals shining brightest. PSU banks follow. Small caps are also higher. Pharma, oil and gas, consumer durables are the other pockets that are hovering up. Top movers on the Nifty. At the end of the first half an hour of trade, you have Tata Steel, Hindalco, JSW Steel, Cipla, BEL as among the top movers. On the declining side, you have Infosys, you have Trent, you have Tata Consumer Products, Bharti Airtel and HDFC and SBI Life Insurance names that are declining. F&O movers, you have Piramal Pharma, you have Manappuram Finance, Jindal Steel and Power, Glenmark Pharmaceuticals that are also picking up pace. So look at Pharma. This could be a space that you should be watching out for through the course of the day, and of course metals and PSU banks that continue to rally. Now look at the Nifty 500 names. What else is taking? Apart from TBO Tech, that's further moved up by 13.7% up now. Look at even names like okay, one MobiKwik Systems, that's pulled up 5.5% higher. Remember, this entire last 1 month, last 1 week has been pretty positive for one MobiKwik Systems. If you look at the last 5 days, last 1 week data, you'll actually see a spike there. Then let's also pull up TD Power Systems. Look at it. I mean, 33% of a rally for MobiKwik Systems in just 1 week time frame. So this has really rallied sharply. ILNFS investments, TD Power, you know, you're also looking at names like KIOCL that's higher in trade, paper stocks that are higher. Look at even sugar stocks that are continuing on a positive zone. EPL Limited is higher in trade as well. So these are some names that are consistently moving up in the Nifty 500 basket as well. So what we'll do is we'll wrap it up on that note on the morning edition of Market Today. But what you can do is continue to stay put. on Business Today television. Market coverage continues on the other side. I'll be back for the 12 o'clock daily calls edition, which answers all your stock related queries with top market experts. So don't forget to tune in at 12 noon.
At the SEO summit in Tianjin, India pressed